And the end of that music and all those legal words. And boy, I don't even have anything to say. Just look at that chart. Listen, gold miners rocketing, big breakout. We're going to break down gold. S&P just kind of just hanging out in oversized condition. Got a few earnings reports, but Matt, like, listen, pleasantries. How you doing? You're doing fine. You're excited to be here. I know.
I am doing great, and I am excited to be here. I'm always excited to be here in the halftime report, and I'm particularly excited today because we got gold. We got the miners breaking 30. It's
Yeah, no, and as a community, tackle trading is overweight gold,
usually.
and usually that is just the general rule. I added a touch more on the breakout of GDX this morning. This is a chart we've been talking off and on about for months and months, and well, been talking about it for years and years and years. But the potential for an oversized move. Talk gold to me, Daddy.
Well, yeah, well, yeah. We usually start with the S&P 500, but we'll break down
But
that.
it ain't doing nothing.
We'll break down that doji here in a second, okay? Let's start with gold because gold is obviously firing off here today. Yesterday I said you got to be ready at any moment. You got to be ready. Anytime you're getting into that resistance level, you just got to be ready. Do you want a high base? Do you want a little bit of a flag here to create that cup and handle? Yes, but we didn't get it. We got the momentum firing off that 2020 breakout level, and it is really, really good to see. And this is something that you just see a increasing volume going into the breakout situation. You break out, this volume is going to increase over the rest of the trading session. That will be an increasing, and you really haven't seen any weakness. Now, the issue here, as of right now, is you are currently at a price that you have not closed above at any point on any weekly chart. You got overhead right here around 2090. And so really decent scenarios can happen here if anybody missed the move. And again, a lot of this gold conversation has been about adding or whatever the case might be. But when you're talking to newer investors or newer traders that maybe have not participated in this run, I do think there's could be some compelling secondary setups here to give people another opportunity, quite frankly. You're coming into the overhead here. You're a little bit range up at this point, and a nice little flag, a nice little high base would just do a heck of a lot here to kind of simmer down the momentum a little bit and give a nice little secondary pattern here. So for the new traders, new investors that have kind of missed out on this little run we've seen in gold recently, not breaking, but coming into those all-time highs, a real good secondary pattern could establish itself right here. And I don't anticipate gold just running on top of the massive resistance level. And so let's see what we do get there. But overall, Mark, I mean, we got a really good breakout. We got a fairly decent pattern going into that breakout. I would have loved a couple of days of consolidation, but we did not get that. We got the momentum instead, and it looks really, really good. Now, that's regarding gold. Regarding GDX, it's a little bit of a different story because GDX, now, again, just think about it like this. The monthly chart on gold, all the way up at the all-time high. Okay, you come over to GDX here. GDX, nowhere sniffing those all-time highs.
We're not even at 2023 highs.
No, we're not.
And this is why we've kind of been obsessed about this chart, you know,
and the ability for it to catch up. Now, a lot of what we've talked about with GDX in our programming is anything underneath 30 was a front-running scenario on GDX. We do believe in the catch-up scenario on GDX, but anything under 30 was a little bit of that aggressive, didn't have purity of technical patterns. Now you're talking about a multiple time frame situation where you're breaking out of the 200-day moving average, you're breaking out of major pivot zones. And I'm just going to tell you guys right now, veterans of the halftime report will know this, but $30 on GDX is like $20 on everything else. It is a major, major psychological number for GDX. And seeing GDX get above that number now would have that number on any dip type scenario. You have the 200-day moving average and you have $30 here. to stop anything from a support perspective. And so anything on the snapback here, and it would be shocking to see some profit taking here, anything on the snapback here, that would be of an extremely compelling argument. When you're talking about the gold stocks themselves, Chucky, let's pull up FinViz very quickly. When you're looking at some of the major stocks out there, obviously Newmont Mining coming into a little bit of overhead. Gold here, Barrick Gold, Tackle 25, Barrick Gold, breaking out of that 17 level, very similar to what we're seeing on GDX. That's something to maybe put on a radar right now. Newmont underperforming gold. These two stocks right here, Newmont and gold, they're 1A, 1B to the gold investors. Both of them are extremely similar from a fundamental perspective. They're the two biggest stocks out there, and the pure gold plays here. And so out of the pure gold plays here, and there's a lot of pure gold plays, I do like Barrick Gold a little bit more than Newmont Mining. Now, in some of the other positions out there, you just need to see it simmer down. AEM needs to simmer down, got a beautiful multiple time frame breakout. That could be an extremely compelling secondary pattern watch. You like gold on a secondary pattern here. You like AEM on a secondary pattern here. Wheat precious metals is an interesting one because it's got gold and silver. It's got the gold silver kicker. Gold's firing off. Silver has, we don't talk a lot about silver in the halftime report, but silver's had a really, really impressive run back up into some intermediate resistance levels itself. And so wheat and precious metals here breaking out of a little bit of a high base itself, that looks pretty clean here as well. Would have to really kind of go bar by bar on Wheaton, but looks pretty good as well. GFI breaking out. One stock to keep in mind on, got a little bit of reversal on AU here. KJC kind of left the station a little bit on that multiple time frame breakout against that 550 level. Same thing over here on AGI. So you are dealing with the HMY. This little dog just keeps going. I love this little stock. But in terms of the gold stocks, they're obviously firing off today, very similar to gold. But Mark, in the past, when we've seen gold fire off like this, we have not seen GDX fire off in this same type of capacity. And so we do have a little bit of a behavioral shift here with the GDX plays in comparison to gold. And that's really positive in my estimation for GDX positions. And again, this initial move in GDX, if you missed it, it was choppy underneath 30, and you had a lot of price movement above 30 very, very quickly. Easily could have been missed on that. But don't fret. There's if the catch-up trade here is legit, and that's a if, not a absolute, but if the catch-up here trade is legit, just keep your eye on the price here. The price on GDX is not a momentum trade back up into 32 or 33. It's a regarding the massive catch-up potential longer term against some of these overhead resistance levels where we saw GDX around 64 back in the subprime meltdown. Now, when you talk about the subprime meltdown, Mark, here's it's coming down during the actual subprime meltdown because GDX is very cyclically based. It's very cyclically based. It's similar to the energy conversation versus crude oil, but I actually see energy stocks behave a little bit more consistent with oil than I do GDX with gold. But when you're talking about that environment of 08, 09, 2010, that environment was the environment that was created at the end of the subprime meltdown when the central banks started aggressively lowering rates and they started aggressively going into quantitative easing. And that created a situation in the commodity space where gold, silver went just absolutely parabolic, and not just for a short-term trend, but for intermediate and primary trends as well. We call it the great silver boom of 2009 to 2010 because silver went from $8 to $48 in a 2-year stretch. That environment was an environment created through a pausing and a change in monetary policy. Now, that was a very aggressive shift in monetary policy. The Fed was lowering interest rates, 0.751 meeting, 0.50 the next meeting. They went to zero interest rates. This was all over a 2 to 3 month time period. Then they announced quantitative easing in April of 2009, and all of a sudden, boom, 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 boom. Now, do we have that environment that we're going into right now? No, we don't. We do not have that environment where the economy of the United States is catering. You have a financial situation that is as grave as anything we've ever went through, and the Fed had to, aggressively change the monetary policy. But you do have scenarios that remind you of that moment, in the sense that, has the Fed shifted its policy, Mark? Or are they
They
hinting at shifting their
they
policy?
have certainly hinted at that without a doubt.
Okay, Waller today comes out, gives a speech, and Waller today suggests that the Fed's policy is in the right position to achieve the 2% inflation. And that isn't, news at 6. That's not shocking. That's not breaking news. We've heard that a lot. But he also suggested that in a moment where the Fed does achieve inflation coming down, they will lower interest rates. And that is the first time a Fed official has hinted towards lowering interest rates. It's the market that has been hinting towards lowering interest rates. It's the market that has been basically calling the Fed's bluff here. It's the market that says, no, boy who cried wolf, you're the Fed. You've been saying this too long. We don't care what you say any longer. And now Waller comes out and hints towards the market actually being accurate regarding the Fed and lowering interest rates next year. And so if the Fed does go into a lowering interest rate next year, you do have a similar scenario where the Fed is cutting interest rates. And in 2008, 2009, 2010, as the Fed went down to their zero interest rate policy, announced quantitative easing, it created a really good environment. Now, why does this occur like this? It occurs because as the Fed lowers the interest rate, or the expectation of that interest rate is to be lowered, well, what has to happen on the interest rate that is affected by that? It's the dollar. The dollar. See, when the Fed lowers interest rates, the demand for the dollar gets reduced. And why does that get reduced? Because the number one trade in the world is the carry trade. And the carry trade is when you're buying one currency and you're simultaneously selling the other currency, and you're capturing the difference between those two currencies' interest rates. Well, if the dollar has a lower interest rate in the future versus other currencies out there, remember, it was the Fed that started the hike. If they start to lower, they're going to be in front of the other currencies. That's going to change the demand equation for the United States dollar. Dollars come down, other currencies go up. When the dollar comes down, that's an environment for commodities. And so you do have some similarities occurring here. And again, there's a lot of speculation. I'm talking a lot about the hypotheticals of next year, but this market doesn't wait for those types of things. It prices things in. And so that's, I just wanted to kind of talk about gold. What are your thoughts on that?
Well, yeah, no, I mean it is like, I love the backdrop there, and it's important. And man, we need to have an extent. I mean, we talked about gold for about 15 minutes on the podcast this week. We need to give a full segment, right? Because there's so many factors at play. I love the intermediate analysis you just did. There are long time driving factors. And Matt, when this market takes a hold of something, I mean, the big question now is what happens next? We got a nice move. We don't have a sustained move yet, right? That's really key as far as getting too aggressive here. But it's secondary pattern watch immediately, like immediately.
Yeah, I think it's an immediate secondary pattern. I think you get a high base, you get a flag here. Both look good. And the sustainability argument above 2K is all about pattern development in front of 2K, and then what we see after, right? We'd like to see a little bit of consolidation. But in terms of that next pattern, yeah, I think it's on pattern watch. And when you're on pattern watch, anything plays. High base, flags, anything plays on it. Pattern watch is all about technical analysis. It's not about
and that's where we're in the realm of that now.
Yeah, it's not about anything else. I don't care
and
about
you
the
did
behaviorals, the economics, none of it. It's all about the technical condition.
And you did a great webinar last night, Swing Trading 101. Well done. I attended every minute of it. And you're a good teacher, Matt. You're a good teacher. You have a lot of energy and you drop a lot of knowledge. And, if you want to know pattern watch, secondary pattern, go watch that webinar Matt did last night. It's on a YouTube channel. If you're watching this, you're not going to be able to go very far to find that. It's right there on a recording. Check that out. But well done last night.
Dave has a great question. Would you keep GDX covered? I personally wouldn't right now. I'd like to see the momentum play out. In fact, I think for a lot of us, it was a matter of uncovering a little bit.
Matt,
or rolling up and out.
I wake up in the morning and I cash flow. I added uncovered shares, which is very rare for me on GDX this morning. Now, eventually I'll cover those, right?
Yeah.
Eventually I'll cover those, but
you got them slightly covered.
What?
You got them slightly covered.
No, I don't have those shares. I don't have all the other gold stuff I have.
Yeah, the put. I was saying, but no. I would say it's that honestly, when you're talking about covered calls, and we're going to be doing a December 19th registration webinar for the Tackle 25 and covered calls. I'll have more information about that as we get closer to December 19th, but get excited about that. I'm very excited about that. But one of the most difficult decisions you have in covered calls is not when the stock goes up. It's when the stock it's not when the stock goes down. It's actually when the stock goes up. And that for a lot of investors, when they're new to covered calls, they're a little weird. That's a little weird. They're like, oh, wait. Don't I just want the stock to go up? Yeah, you do. But you have decisions to make when the stock goes up. When the stock stays sideways or stock goes down, it's really, really easy on covered calls. You just write covered calls as much as you can. When you buy it back, when the premium gets reduced or it goes to expiration, you just keep writing. In fact, some of my favorite environments for covered calls are slight fading bearish conditions where you can basically offset anything of the loss and add shares at the lower point on the chart. And so one of the biggest decisions people have in a covered call is not when it's sideways or down. Those are relatively easy, quite frankly. It's when the stock breaks out and you have to make a decision whether or not you want to remain covered or not, or whether you want to roll that call option up to a higher strike price or up and out to a higher strike price and a different expiration date. And that's what we're faced with here on gold. Now, it's a good problem to have. Let me be very clear on that. That's an extremely good problem to have, but it's still a decision. And anytime you have to make a decision, typically you're like, well, do I want to cover? What if it snapbacks and I regret not being covered? Well, I think you got to rely on your technical read there. I just think you have to rely on your technical read. And when you have momentum ignite and you're breaking out of a potential catalyst that could be significant, I think you allow the risk graph to open up a little bit and you take on the risk for the potential reward that GDX gets caught up. And at any sign of weakness, you can then sell a deeper out of the money call option to cover at that point. So I do think you let the momentum play out. I also think that is a wonderful, wonderful question.
Yeah, no, and it's just one of those, hey, listen, we might be down 1% tomorrow on GDX. Who knows? Blah, 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 blah. Right. When this market takes hold of something lately, right, it runs with it. And just the chance that that occurs, I think the risk reward is favorable. Let's go talk about this doji, Matt. Let's go. And if you have any questions, this is a great time to check into the lounge on a day-to-day basis. I'll be on the lounge for pro members on Wednesday and Friday this week. Gina will be there on Thursday. If you have questions, like, hey, what would you do? Get thoughts. Great little period for the lounge. Now let's talk about this snooze fest on the S&P 500. And I say that affectionately because, we're extended. Our podcast this week was how do you navigate overextended, situations. Hopefully we have that in gold. Hopefully we're talking overextended situations in 2 weeks, like
if we're talking a parabolic momentum move, I think we're all happy.
But listen, this thing needs to take a breather. Matt, if I'm looking at this chart 8 days from now and we're in this relative range, I'm going to consider it a massive win for the bulls. Like, the less that happens, the better in the short term for the bulls, because you allow all those moving averages to catch up. You allow it to take a breather, right? Do you generally agree with that sentiment?
Yeah, I do. I think I said the perfect setup going into the end of the year would be basically 2 weeks of consolidation in front of labor market news, and then the market breaks out on labor and gets momentum on inflation coming back down the week after. That's kind of how I see it, Mark. I don't see, and again, I know there's a lot of economic reports this week that are colored red. I don't believe there should be a lot of economic reports this week that should be colored red, but I just don't see anything major on the horizon that would spark the additional one until we get the labor news. And so, and again, volatility can come out of nowhere. News can come out of nowhere. The Fed can say something. Internationally, something can occur. Many things can occur. But I do think that would be a really good backdrop going into the end of the year rally. I do fully expect an end of the year rally at this point, primarily based on the fact that a lot of money managers in the market, they are significantly underneath the S&P 500 this year. And I'll tell you why. Everybody knows why. It's because if you are not overweight Max 7, you're underweight everybody else this year. And so those money managers who are all, and I know this very well because Tackle 25 is not overweight Max 7. It's underperforming the S&P 500 this year because the Tackle 25 is an equal weighted type scenario versus what the market is, which is not an equal weighted scenario. But to me, in the Tackle 25, I really could care less about that because that's a cash flow system. Don't get me wrong. I love when the 25 beats the S&P. I think the 25 off the top of my head has beat the S&P 4 out of the last 5 years. And so this year it will not, because it doesn't have NVIDIA on the Tackle 25. NVIDIA is not a good covered call stock, for example. But that's a covered call system. When you're talking about those fund managers on Wall Street, Mark, they're going to have to chase tech. They're going to have to chase comps. They're going to have to chase some of these high flying areas of the market, or they might not get a lot of money to in their brokerages account next year. And so you will have a little bit of chase, and unless anything in the economic data changes, I do expect a little bit of a fade up here, maybe even a little bit of a rally coming in. But I just see this as a high base right now. That's all I see this as, a high base with the 9 EMA catching up. We'll wait on whatever the catalyst is at the time.
Yeah, no, and you pop over to tech. We're seeing
that was a great way to paint a doji.
It was a great, well, I mean, it's just a realistic way to play, to paint a doji. Go over to tech, just briefly for 4 seconds. We're seeing roughly, same thing. I mean, you're seeing this pattern a lot in some form or another. Big rally, take a breather. Big rally, take a breather. But if you go over to small caps, give me the Russell right here. And I'm very just curious about small caps. I mean, talk to me just technically here. You're under the 200. You've taken 9 days off, right? Like, this is a very tight range for the Russell.
It's a trade scenario.
Like the Russell is a very, you usually don't have this tight of a range for this long of a time. Like, really waiting for something, right? Some catalyst, some moment. How do you break this down? So you say K-trade. What does that mean for new people to our community?
K-trade scenarios are basically short-term consolidation where you could see a violation of support or resistance, and either one of them would be actionable on the short term. That's a K-trade scenario. Basically, it's literally named after a K because when you draw it, it looks like a K. But that's basically the mentality. I think the probability is to the top side here, but again, I also think you got some significant overhead that you have to concern yourself with. When you're looking at the intraday data here on the 30-minute chart, let's just take a look at that. You see this little pivot point right here, 1815. You got the top shelf, 1816. Got a lot of chop over here on that. That's the wick that tried to break out, that couldn't, that came right back down. But outside of that, you're pretty clean right here around 1815, 1816 on the intraday chart. A breakout of there, yeah, you should see a little bit of love. There's no doubt about that. If you're looking at anything like aggressive here, you're just looking at 1816, saying, Russell, you get above that, that's an aggressive trigger. But again, I also think you got to take into account the 1830 level. It was 1835. 200-day moving averages came down a little bit to around 1830. That's consolidated a little bit. Hey, Chucky, if we get another 9-10 days, that 200-day moving average could be right around. I kid, but kind of not. But in terms of that, and so it's just a tight. If this 200-day moving average was right there, I would love it, Mark. I would love it. I'm micro analyzing the data here, but you just have overhead here, and so it's a little bit difficult. I'd like to see a breakout of the 200-day moving average. If you get a breakout of the 200-day moving average, I think you can call that a confirmed breakout. You do have chop on weeklies and monthly charts here, but to me, it's not, you want to be trading the Russell. You're trading a lot of stocks that are in the Russell.
Yeah.
Does that make sense?
Yep.
And so we can obviously be selective on the ones that are a little bit more improved versus what the Russell's doing itself. But I do like the Russell. I just wish it was a little bit cleaner technically against that 200.
Yeah, no, let's pop over to the commodities areas. We talked about gold. Let's go talk crude oil. OPEC's meeting. Man, I saw rumors this, rumors that. We're in the sewing circle stage of the OPEC meetings, where headlines do this, headlines do that. Plain simple fact is, man, that is starting to look like a consolidation pattern. It's messy, right? Because that big red wick to the bottom, but it's really settled down the last couple of weeks. If we break out of 78-ish, right? Would that launch cash flow for you? Would you have any interest in directional? What do you need to see to get on board?
I'd be more interested in directional, but I think it's important to see OPEC. I think it is important to see OPEC this week. That's the number one report this week. And a lot of the volatility of the last week or so has been based on the speculation of what OPEC is or is not going to do. We don't got too long before that gets confirmed, and there's going to be a lot of volatility during that moment. And so I kind of feel like we can be a little bit patient here. Don't get me wrong. You can see some explosive volatility, but I don't want to get in front of the Mac truck. Let's see what the information is, and then let's process the technical scenario after the OPEC meetings. Now, if we do get a breakout, Mark, that could look really, really good for crude oil. If you do get a breakout, you could see it start to run up, but I would not love a trade on crude oil. I don't mind cash flow here. You can sell underneath a lot of different pivots here. But in terms of the directional, no, I do not like the directional side of it. It doesn't mean it can't go up. It just means you got a lot to fight through on the directional side of the equation. However, when you come over into energy itself is looking a little bit better. You got a quadruple wick top right around 85.5 right now. The weekly chart here, you break back up above, it looks pretty decent. And there's a lot of decent energy stocks that are a week or two away from looking really good. If you get OPEC to come out and do what we anticipate them doing by announcing more cuts. If they announce more cuts, you should see oil go up. It'll be volatile. Energy will be volatile in that moment. But if it's kind of like an earnings result, Mark, if the earnings result goes up, there's going to be a great secondary pattern that we're going to be able to trigger off of. And so I'm kind of looking at that as a major economic report that's going to have a massive impact on the space, and one that could be a catalyst, not just for a volatility moment, but for a trending situation.
Yeah, no, hang out here as long as you want crude oil. The longer you hang out,
the better the resistance.
The better the opportunity. I mean, it does look pretty nice from a cash flow perspective. Will you give me
I don't got any problem with cash flow, but
will you give me copper real quick? It gives me a chance.
Gives you a chance to say I was right and everybody else in the world was wrong.
This is, I've been talking copper for weeks now, right? And I loved the cash flow stabilization, and now you have classic, and now you're stretching the 200. You're always going to have chop to the left on copper. You always are, right? Like it's copper, but that's not a bad look, is it?
No, it is not. It's found the 9. It's caught the 9, even in 2 volatility moments. It could not break the 9. And then on a day where commodities are getting a lot of love here today, you're seeing that 9 get hold firm yesterday, and you're seeing a breakout of the 200-day moving average. You come out to the weekly chart, Mark, and it paints a scenario where you could get a really good scenario on copper here. You are currently sitting at the 50-period moving average. The wick right now is 3.855. the 200-day, the 50 period moving average, what is that? 3857. You are literally kissing up against that 50 period moving average that if you break, looks pretty clean to four. Looks pretty clean to four. Now, copper for us, a lot of times it's an FCX conversation.
Yes.
And FCX here, pretty decent reversal scenario here. Pretty decent reversal scenario. Now, I'll say this is a pretty good setup here for an aggressive short-term trader. That is a fairly decent setup where you can get it right above those wicks. You got a flag, you got two wicks that are confirming here. You can get right above those wicks. I do want to paint a different scenario on FCX though. You got this level at 38 here. Look at 38, nice little pivot point, a lot of action here at 38. I think kind of 38 is the number here. You come out to the weekly chart. Yeah, that 20 period is right there at 38 as well. And so I do think direction is challenged because of 38. And then you got the 200 at 38.50. That's going to be a battle zone right there. And so the problem with FCX is on the directional side is if you buy the breakout at 37.57, you can't target above 38. And I'm sorry, on FCX, 50 cents is not good enough on FCX. You want open air on FCX. And so on FCX, I think it's one of those situations that if we are a little bit patient here on, and I'm speaking on the directional side, cash flow side's great. Like if I'm talking about a pristine multiple time frame scenario that could establish itself in a week to 2 weeks from now, theta's already there. Would you agree with that?
Yeah, no, theta's already there. Naked puts, aggressive cash flow, all that's already. It's we had it on our scouting report, not this past weekend, the weekend before.
For cash flow.
Yeah, I mean it's there already.
Yeah. But on the directional side, I just kind of, I've always been hesitant underneath that. And so I do kind of like it up here and then a breakout, combine that with the 200-day. That looks like a little bit of a better setup. And so I still think FCX specifically needs a little bit of time on the directional side of the equation, but theta's already there.
Listen, I was sacrilegious in church yesterday.
You were, punished you.
This is what I get for being sacrilegious in church yesterday.
You talked down your own investment, buddy.
You know, like, well, that's what I get.
You talked down your own trade.
You know, like,
that's funny.
Equities are, and it's one of the things we do well at Tackle Trading is like, it's not just stonks for us, right? We talk about, markets, markets themselves, and
we like all the markets.
I just, these anti-fiat plays are having a good day.
They are. Yes, they are having a good day.
Yeah.
We are good at a lot of things at Tackle Trading. One of the things we are not good at is spotting a nice directional swing trade on Bitcoin.
Yeah, because nobody is.
That's just really hard. Listen, it's found the 9 2 straight days. It takes on a beat of its own, but if this was anything else, this looks pretty decent on the breakdown.
Yeah, no, it's we'll see what it does here. Like
it doesn't have a great track record of, oh my goodness, this looks really good on a breakout and then actually working really great on a breakout.
Yeah, no,
it just has a lot of volatility on that.
But we went to church. We were more religious today than we were yesterday. So
listen, you put the royal we there. I said it.
Right. I was sacrilegious. The pastor kicked me out of church. Said I was the behavior is unacceptable.
That behavior is the exact same behavior it does all the time.
So. All right. So before we get into stock talk, Mac, talk about our upcoming our current holiday sale we got going on Tackle Trading.
Yeah. This is the season for holiday sales for every company, I believe. And it's certainly the same case for Tackle Trading. And so if you're looking for any of your educational needs, go over there to tackletrade.com, check out the storefront, and you'll see all of our educational products, our systems, our on-demands are on discount, to a significant discount right now. Coaching's on a discount. You can get your annual membership at Tackle Trading on a discount right now as well. Trading Labs on a discount. No, man, everything's on a discount. So, and if you need to talk to Coach Sylvia, to schedule a 30-minute consultation, That link is on the, if you go to the storefront, it's right there on the coaching tab. It says schedule consultation. You can do that. And there you go. We did the store.
Yeah, no, listen, a lot of good stuff. We got a great community. We just have a great
We're not the
community.
best promoters of our products, but our products are the best products out there.
We do have great education. We give 100%, and we're pretty damn good at what we do. We just are. Let's get into stock talk, Matt. You know, it has a feeling of one of those, it's not really a stock talk weeks, right? But there's always a few tidbits.
There is. You know, last Tuesday in the coaches show, we talked about AI, and we did a whole coaches show on AI stocks and AI opportunities. And the reason we did that is because it was NVIDIA week, and we wanted to talk about NVIDIA and basically get an overview of the entire AI, you know, space to a certain extent. You got a few of those stocks reporting earnings this week. And one of those stocks is an application AI stock, and that's ZS Scalar here. ZS comes in today with an absolute great report. Not unexpected, quite frankly. It was expected, especially based on what we saw out of some of the other stocks in the space. ZS comes out with 67 cents against a 49-cent expectation. That is a really good beat on EPS. Revenue does top 30,496 versus the 20,496 versus the 476 expectation. Revenue went up 39% year over year. They weren't done. They pulled off the hat trick. They also increased EPS guidance for next quarter by 10%. Wedbush comes out immediately and upgrades their price target to 210 on ZS. ZS comes out, really good report. The only problem with ZS and why it gapped down is, quite frankly, it was up a lot going into earnings, and we all know how that transpires. That when you're up going into earnings, you got to do something great. ZS did something great. They still gapped down, but Mark, they gapped down. They didn't stay down. They fired right back up into that resistance channel. This looks really, really good on a potential breakout. You're looking at, you had a high base going into that. I'm still looking at that as a high base. A close above 195 makes some sense. A trade above 195 makes some sense there. You look at the weekly chart here.
Yeah,
Mark,
these are some
high flyer.
Yeah, these are some nice charts that are not, that have lots of room to run historically, that have shown relative strength recently. That combo it's the Amazon combo, right? It is hey, we're showing some relative strength, but on the weekly chart, it very, you know, nice. Those are that's my favorite chart setup.
Yeah. And it has a multiple time frame as well, right? Where you got this, and again, you got 200, 195. That's kind of the resistance level. Look at the top of this wick right here. That's kind of the pivot point. The top of that wick is 194. The top over here, the top wick's over here. You got 199. Top wick over here, 199. And so you got a little bit of a 5-point range on resistance between 195 and 200. Aggressive traders will not care about the wicks from 2 years ago at 200. They just will not care about what I just said on that weekly chart. Aggressive traders are looking at the base of 195, and they're saying if you get above 195, that's a trade. The conservative trader who loves multiple time frame situations probably waits for a close above 200 to giddy up and go. I think ZS needs to be on a watch list. It's got a really, really decent earnings argument. It's kind of NVIDIA light from an earnings perspective. It's not a semiconductor. It's more of an application software company that deals in the application AI space. But again, they kind of run on a little bit of the same gasoline. And I really like this earnings report. I thought it was a really good earnings report.
This stock paints a really interesting story, because you look at the left of the chart in August, September, October, you didn't do much. Remember, the market was in turmoil. People were talking new bear market. People were panicking. Lots of stocks were getting butchered. And what did ZS do during that time period? It didn't do jack.
Yeah,
this is a really interesting technical story. It's telling on multiple levels. If you don't mind, do I have
that's a head and shoulders on the monthly chart, by the way.
I'm going to go add ZS to my watch list for the first time ever.
I think it needs to be on a watch list. I don't know.
I just added and see if I can get because that's a very interesting technical story.
It is it's an interesting technical story. There's no doubt, but it's got this is not a valuation conversation. It's got a really good growth argument as well. So ZS comes through on an earnings beat. There's no doubt about that. Not to be outdone. PDD here. PDD, Chinese agriculture company here.
Listen, if there's one thing I know,
they don't deal with food.
If there's one thing I know in life, it's women's clothing and Chinese agricultural companies. Chico Foss got bought out, dude. I need a new Chico Foss, dude.
I don't know if it's going to be PDD, but we'll find you your new Chico. I'll promise you. Okay. PDD comes in, just beats here. Really good beats, actually. PDD came in at 164 versus the 121 expectation. Revenue came in $2 billion above the expectation, 9.44 versus 7.53. Mark, the one thing I wanted to talk to you about with PDD was their growth year over year. This is a Chinese company. Last year, remember, last year, Chinese economy shut down. When did we officially open up out of the pandemic? I can't even remember at this point. Was it like 2 months after the pandemic started?
We were on a much faster trajectory, to say the least.
We were 3 years in front of China.
Yeah.
Right? So China was still shut down last year. They're doing a hastily reopening this year. So last year over year, PDD's revenue went up. What was it, 89% year over year? $2 billion beat on revenue, and they're firing off here. Is that the Chinese Open, or is that just related to PDD in your opinion?
Like I said, there's two things. I can't speak to Chinese agriculture. I'm a big fan of having cash flow exposure to China.
Yeah.
Right. Like, I'm a big believer in the theme.
I was not expecting you to break down the agriculture components of PDD.
You know, and so, like, I don't know, dude. I mean, this chart's had a lot of relative strength for a while now, right? This does not look like your average Chinese stock.
No, it does not.
You know, and so this thing has had relative strength compared to China for a while now, right? For a while now. But
by the way, it's one of the best performing Chinese stocks in the market this year. It's only outdone by the one Chinese stock on the Tackle 25 this year.
You know, so
all right, that's PDD. PDD technically here, Mark, obviously left the station here, got to simmer down, settle in. You could get a base here. Any momentum base pattern here would play. High base, flag.
Oh, absolutely.
All of that makes some sense. All right, let's move on. Let's talk about Boeing, Mark, and let's play the agree to disagree game. We got a couple upgrades here. Paint me as not surprised in the slightest that Boeing's getting an upgrade right now. Boeing gets an upgrade at RBC here today based on what I reported just a couple weeks ago regarding the Dubai Air Show. If you'll recall, Boeing during the Dubai Air Show, which was just recently, just on this big power candle here, they basically had orders. Let me get the orders right. I think they came in at like 295 orders versus around 90 for Airbus, I think it was. Well, RBC comes out with an upgrade today, making that exact same argument, increasing positive demand, Dubai Air Show domination, specifically against Airbus here. They're upgrading Boeing here. What are your thoughts? Agree or not?
Man, I don't know. Like, Boeing is kind of, I used to trade Boeing all the time, right? Like, it was like one of those stocks that was we all did. Like, always had a play on, like, you were always looking for opportunity.
It was always on a watch list. It was always on every pattern watch. You got a pattern on Boeing, you took it.
Like, it was just like 2017, Boeing was like the best stock to trade. It was the NVIDIA of 2017. Like, it really was. And I'm not like, it was it was just that type. So, I mean, is Boeing a long-term winner? Probably, right?
I got U.S. government backing.
Well, yeah, I mean, it just has that, institutional backing. I mean, remember, like on the pandemic when Trump was like listing, he only listed a couple companies that like we're going to help no matter what. Boeing was one of them, you know, and so it has that like just type of long-term support. So it's hard for me to like go against Boeing because of that. So I'll err with Juan Crew. You know,
Not my favorite stock. Don't need to talk about the reasons why, but I don't disagree with the upgrade. Like
yeah,
fundamentally, Boeing's orders coming into the Dubai Air Show were extremely
that was an
impressive.
impressive moment.
That was extremely impressive. I don't want to say it's the first time they trounced Airbus in recent history, but it was it was a curb stomping of Airbus when it comes to the orders Boeing
No,
got.
like, the equivalent, to put it in football terms, it's like the Eagles and the Chiefs playing one another and one of them winning by 32. Like you know, two great teams meeting and just an
Now
asshole.
I'm stuck on the two best teams in the NFL, and you didn't name the Dolphins. Like,
I did that on purpose.
yeah. Like, but if you would have, but on the flip side, if you would have said Airbus in comparison to the Dolphins, I would have been offended. So
Yes,
yeah.
yes, yes.
Yeah. All right, I'll agree with it, but yeah, it's Boeing. All right, let's talk Amazon here. Amazon tried breakout yesterday, coming back down to the 90 EMA today. Still love it. I think everybody else does as well. Amazon announces a new AI chip in a partnership with NVIDIA today regarding their AWS. And so Amazon has a little bit of news here today regarding a partnership deal with a new AI chip that's going to power AWS. As a user of AWS, thank you. We appreciate that. It's going to increase the speed and help our time frame. I appreciate that. And so I like the news as a personal consumer of AWS, but outside of that, I don't see this as a game changer for Amazon or NVIDIA. This was an expected news story. I just wanted to talk about the chart. Nice little breakout. Confirmed yesterday. Anything above 149 looks really, really, really good. Still opportunities on the 90 EMA. Still like it.
Yeah, no, it's just one of those charts, right? Take a breather, catch up. Like when you look at the last run up in Amazon in what was it, May, June, July, it wasn't, I mean, it took a surge up and it wasn't clean, but it grinded its way up, right? I mean, that was the personality during that stretch. And it took it just grinded. This was what this feels like right now, just grinding.
Doesn't feel like the market wants to do much of anything aggressively here. And until we get some degree of catalyst with the S&P breaking out, I wouldn't anticipate a lot of movement in the market until the market decides which direction it really wants to go here, whether it wants to pull back a little bit or whether it wants to break out. Whenever you're dealing with overextended, and we talked about this in the swing trading webinar yesterday, whenever you're overextended, it's all about breakouts or retracements. Everything is about breakouts or retracements. Right now, the pattern suggests breakouts, but breakouts that don't get confirmed can easily retrace. And so we're just kind of on pattern watch in the market versus the high base versus the whether or not it wants to pull back to a certain extent. Last news story, Affirm Holdings here. Affirm. Power move, breakout yesterday, confirmed here today again, secondary confirmation. A lot of chatter on buy now, pay later. A lot of chatter on the over Cyber Monday, Black Friday, holiday sales. A lot of chatter over buy now, pay later, and a lot of it is based on not using credit cards that have an average credit card interest rate of like 25% right now. And so buy now, pay later, Affirm Holdings, one of them. You have other companies out there as well. But because of the increasing demand of buy now, pay later type scenarios, by the way, this is buy now, pay later is nothing new to the market. I remember back in when I was a kid, back in the 1980s, Mark, there were stores in the local community we grew up in was buy now, pay later. And so it's being refurbished here in this high interest rate environment. And during the holiday sales so far, you've had record numbers coming out of the retail side of the equation. A lot of influence on the buy now, pay later scenarios. A firm gets upgraded based on that out of Jeffries here today. And so when you're looking at this technically, it has one of those situations that probably left the station in the short term, unless you were getting involved on that breakout yesterday. Looked pretty good on the breakout yesterday. But if you're like many of us that was not looking at a firm yesterday, but just kind of found it on the news here today, kind of left the station here, doesn't have any major resistance until about 40 here. What that means is one of two things. Either one, you immediately put it on a watch list for any secondary pattern, such as a high base or a flag base pattern with the target of 40, or you just wait for a multiple time frame breakout of 40. Nobody wants to do that, which means if you put a firm on a watch list, it's based on the momentum of the story that's playing out right now, and you're looking for a pretty quick secondary pattern with a potential target up around 40, which is pretty significant.
Mm. Mm. That thing's gone parabolic.
I'm not sure what the grunting means.
I just don't like a firm. So I was trying to do the, if you don't have something to
don't
say,
like momentum.
Don't say. I specifically don't like a firm as a company. Like, so
I don't have an opinion on the company. I have an opinion on the storyline, the momentum, and the technical conversation.
And that's been real. And that's been real. So I was doing the if mama said, if you don't have anything nice to say, don't say anything at all type moment. That's what the grunt was all about.
That was the grunt. That was the grunt. All right. That's all I got for stocks in the news here on Tuesday edition of the halftime report there, Chucky.
Well, listen, we got Coach's show tonight with Coach Frank, Coach Gino. I'm going to try to twist their arms in creative ways to play momentum, right? Different, the variety. There's so many things you can do, right? You can buy stock, you can do butterflies, you can do bull call spreads, you can do this, you can do that, right? I mean, you got a million strategies you can do, to play it, right? Like, I bet you could do something creative even with those two candles that would fit within risk parameters. Probably not buy calls, right? But something.
Like, are you talking on firm still?
Yeah, well, but anything in momentum. Like, there's a variety of strategy. I mean, Gino's great at that, right? Like, I'm show a butterfly and it's going to cost me
fantastic, but that's an option strategy conversation, and those are really good, no doubt. Need to learn all of them. I wouldn't apply them on a firm.
No, but I'm just saying,
Coach Frank, bar by bar directional momentum trade.
But Coach Frank, Coach Gino tonight on the coaches show. Matt, interesting market, great price action on gold. It's going to be fascinating to watch that. It has been it's been what I've been referring to, Matt, as a get healthy stretch, right? It's been a get healthy stretch in bonds, in equities, in variety of equities, in gold, in commodities, right? It has just been a get healthy stretch. And now it's about navigating the overextended situation. And I think we're doing a good job laying that groundwork, but give us some final thoughts, close us out for the day.
In general, you're elevated here, you're overextended, you're waiting on pattern watch. There's a lot of the trades that we've had over the last few weeks are coming to some degree of first target, secondary targets. The scouting reports this week, I love doing the Delta Dogs every Monday, because every single Monday we go through the watch list in detail, talking confirmation, changing orders. And if you want to be a part of that, come be a part of the Delta Dogs every single Monday, because every single Monday we're looking at making trades. The first question I always ask people in the trading labs is, all right, who's here looking for a trade? Everybody says yes. I say, okay, second, how many trades do you currently have on? And we really focus on the scouting reports there. And so in general, you got a few stocks out there that have setting up, breaking out right now that look really good. But that's specifically to certain stocks in the market. In general, I think you're still navigating over extended scenarios. RSI currently in the S&P is at 77. Nobody's going to make an argument that has value here from a technical perspective. You have seen it come down through the consolidation. That would either need to see more consolidation to either get underneath that 70 level to get outside the overextended situation, or a little bit of a pullback would certainly alleviate the pressure, circa kind of the Russell 2000 scenario. And so I do think in general you're kind of patiently waiting on a secondary pattern here in the S&P 500. It's just fading price action, still in general overextended, and so a little bit of a caution flag in the market in general, given the fact that we're elevated. But overall, Mark, I haven't seen any weakness in this market, not since Powell's pivot.
My plan on Sunday, because I know I'm at my best when I plan out what I want to do generally during the week, right? Like most of us, right? Preparation. And in my things, because me, I like to fade. I like to be contrarian when you get big moves. And I'm like, until I see shifting volatility, I can't entertain bearish. I just can't. And well, that's not what we're seeing at any stretch of the imagination. We're just seeing what you would expect in overextended conditions. I'll wait. SD, dude, I want to hear them out of your mouth before I get bearish. SD.
Well, it's
shifting volatility, and that's not
happened yet. Hasn't happened yet. Now we do have the preliminary GDP report tomorrow. It's expected to come in at 5. The preliminary one came in at 4. Not the preliminary, but the advanced one came in at 4.9. So it shouldn't have too much price move to the GDP report tomorrow. From an earnings perspective, you don't have major names that are driving the market, and so unless something comes out of nowhere, we don't even have a Fed speech tomorrow. I'm sure somebody's going to say something about the Fed. By the way, the Fed is fantastically, amazingly delusional these days, Mark. Just in the last 2 days, I've heard one Fed official say we're going to raise rates, and today I heard Waller basically say we're going to lower rates. They're all over the board. So you don't have a lot on the docket to really kind of drive the market this week. I know you have a lot of economic reports, but the PCE report in the OPEC on Thursday is kind of the catalyst in my estimation. And so I think we're probably going to see a little bit of the same tomorrow as we come into the PCE report and OPEC on Thursday.
Yeah, indeed. Well, everyone have a fantastic day. Coach Frank and Coach Matt will be on the halftime report for you tomorrow. But if you need anything at all, just email me at team@tackle trading. Be happy to help.
Later, team.